Welcome to Market Insights. I'm Matt McCall. Thanks for joining me this week. We got a big show coming at you. We're going to talk about a sector that if you've been following me for a while, you're probably going to shake your head and say, what the hell's he doing? We're going to focus on the metals and mining aspect of investing. To me, we are at the early stages of what could be a multi-year bull market in metals and mining. I'm going to name the one metal that I think is the backbone of this bull market. We're going to talk about stocks. We're going to mention 6 stocks throughout this that you should put on your watch list immediately. And also talk a little bit about this week, which of course, it is Fed week. All that and more coming up right now on Market Insights. Once again, I'm Matt McCall. Thanks for joining me for this week's episode of Market Insights. We're going to take a look at the metals and mining industry, and we're going to break down everything from copper to lithium to manganese. I mean, a little bit of everything. I'm going to name at least 6 stocks that are on my watch list for next year and beyond. These are ideas that are coming across my screen that I'm sharing with you. I'm not telling you to run and buy them, but I'm sharing ideas that are popping up as this major trend takes shape. But real quick, before we jump into that, we're filming this on the 9th of December. And about this time, the Fed will get out there and make its decision, the final one of 2025, on interest rates. As of this morning, there is about a 90% chance that the Fed is going to lower interest rates on December 10th by 0.25%, referred to as 25 basis points. To me, it's about a 100% chance. And maybe by the time you're watching this, the Fed's already come out and done that. The most important thing, though, in the meeting on December 10th will not be what happens, because again, I think it's already baked in that we're going to have interest rates cut by 25 basis points. What's more important is what Fed Chairman Jerome Powell says. What does he say about the next meeting, January 28th? Because in that meeting right now, according to Fed Watch, there's only about a 24 to 25% chance of another 25 basis point cut. So you got a 1 in 4 chance. That could change dramatically. We're talking 7 weeks from now. So in the next 7 weeks, a lot of things can change. I mean, we know one thing is changing, the calendar flips. What the market does, what the labor economy does. Because the numbers that came out on Tuesday of this week, the JOLTS, that's short for Job Openings and Labor Turnover Survey. That's a government-run number. Because the government shut down, we didn't get the numbers from September, October until this week. The October number came in at 7.67 million job openings. That's well above the estimate of 7.1. It's well above the August number, which is the last one we knew until today, which is 7.2. And the September number came out today along with the October number, also above 7.6. So it's a softening labor market. We had Challenger Gray and Christmas came out. They said it was the worst October for planned layoffs in over 20 years. We had ADP, the private payment processor, came out and say only creation of just over 4,000 jobs this week. So the labor market is softening. So even though we have inflation 2.5% to 3% in that range, which I think it stays there for the foreseeable future, the softening of the labor market allows the Fed to be more aggressive in cutting interest rates. The more aggressive the Fed is in cutting interest rates, the better it is for stocks, especially some small caps and some sectors that really rely on borrowing money. And let me show you 2 charts before we jump into the metals and mining. And first one's going to be the IWC. This is the iShares Micro Cap ETF, the smallest companies out there. This is breaking out to the best level ever. I'm going to zoom out and show you those. Trading at the best level ever, above the 2021 high. Not a recent high, but 4 years ago, breaking out above that level. Why? Because there's an anticipation rates will continue to come down. And here's another one. This is the XBI. I've talked about this a lot, the biotech. It is pulling back a little today, but when I zoom out, you look at this chart, it's recently broke out to the best level since 2021 out of a several-year slump, just starting to turn. As that turns, you see a lot of other money coming into other sectors that are very reliant on borrowing money. Interest rates go down, it's cheaper to borrow money. So this is a major theme, folks, that will keep this bull market going and really help some sectors that have lagged a bit, in my opinion, outperform in 2026 and beyond. But for now, let's jump into what I really want to talk about. And that's all about the metals and mining in 2026. Sure, gold's had a great year. Silver's had a fantastic year. Copper's had a great year. But to me, the future is all about looking at the big trend. And metals, to me, are entering a multi-year bull market. We have a global energy transition that's accelerating right now. A lot of it has to do with AI data centers that are driving massive demand for power. With infrastructure plus electrification, what goes into that? A lot of different metals. It's metal intensive. Supply under investment for over a decade. You realize for over 10 years, the amount of money going in to keep supply up for a lot of these industrial metals has been low because the demand really hasn't been there. But with demand really taking off and accelerating into the end of this decade, we have an undersupply, and that's simple economics. If we have demand increasing, supply not keeping up with it, the only end result is higher prices. And Bank of America went as far as saying that commodities are their number one pick for 2026. So let's set this up a bit. We have demand that's coming from multiple different sectors: artificial intelligence, robotics, data centers. We also have electric vehicles, charging networks for electric vehicles, battery storage for renewable energy, solar, wind, etc. We have the modernization of electrical grid, which are so far behind. Then we have a really important one that's overlooked: national security and the whole process of reshoring, bringing manufacturing back to the United States, bringing back critical metals and minerals being mined here in the United States, being refined and processed here in the United States. That all means there's a lot of investments going into these metals and mining. And supply is constrained. We have mines that are getting depleted. We have declining grades of these metals. Permitting cycles are so long. Will they be faster under a Trump administration? I would certainly hope so. But it's not just the U.S. There's other places around the world where a lot of these minerals and metals come from. And the other thing is, we have limited new discoveries. It's not like you're just finding brand new copper and graphite and all different types of things all over the place. Deep sea, yes, I think that's a possibility. That's been a big winner for us. But if we take a look at the reality of it, there's not huge new mines being discovered. So breaking it down, looking at the actual different metals out there, the most important to me over the next decade is copper. They call it Dr. Copper. As goes copper, so goes the economy. We hear that a lot. But it's the backbone of the electrification of everything. You think about AI data centers. That's one really area where we're going to need a lot of copper. It's expected to double its copper demand by 2030 because of AI data centers. About $60 million worth of copper goes into a single 100 megawatt hyperscale build-out. $60 million worth of copper. What about electric vehicles? A lot of people say, well, that trend's not as big as it was. Well, they're still expected to sell about 21.5 million EVs next year. It's up from about 20 this year, but it's also about 25% of all cars being sold. That's a lot. And EVs require 3 to 4 times more copper than your traditional gas vehicle. Then we have the charging infrastructure. The more EVs out there, the more charging we need. The charging infrastructure, what do you think connects all that stuff? Copper wires. Then we have the energy transition, solar, wind, etc., more renewables. You need storage for that because the wind's not always blowing. The sun's not always out. You need to have better battery storage, very copper intensive. Then again, we talked about the grid before, but the global grid is being rewired, completely rewired. And then you add in that there's structural deficits that are expected to start this upcoming year in 2026. It's a copper crunch. We are in the midst of a copper crunch. And that is a thesis for 2026 being basically a year of copper when it comes to metals and mining. Now, just to break down, some more supply issues. Keep in mind, mines take about 10 to 15 years to build. Existing mines, as I mentioned, falling grades. Copper's not as good as it was before. You have shutdowns, you have strikes, you have environmental delays happening all the time. You have the underinvestment going back over a decade. And then you have global deficits that, starting 2026 is the estimate, but likely to last for another decade through the mid-2030s. So when you have high demand, constrained supply, it's long-term price pressure to the upside. It's a great setup for copper and copper miners. Now, this week in Market Insights, I highlighted 3 copper stocks. I'll go through them really quickly with you. Hut Bay Minerals is one of them. And it's a company that I've known for a while. Past newsletter, I recommended it. And HBM is a symbol. You can see here in the chart, big North American story here. This is a North American based company, which is very important because with the reshoring, with the national security issues, our government, Canadian government, Mexican government, really let's call it North America, very, very focused on getting the mining on this continent, not relying on players around the world that might not be our best friends. So on the chart here, you can see HBM intraday hit a new multi-year high. I'm going to zoom out a bit. And you can see this stock has just been a big winner. Broke a downtrend back in 2020, and now coming up nearing the all-time high set about 15 years ago, up around 19. This, to me, again, can continue to be a big winner. The second idea is probably a company you never heard of. It's a Chilean play based out of Chile. It's a big company with long life reserves. It's Antofagasta. And the symbol here in the U.S. as an ADR, which is an American Depository Receipt, which means it trades here, but you're not owning the actual stock like you would if you bought on the exchange where it trades in South America. Symbol here is ANFGF. But again, you can see on the chart I'm showing here, not a lot of volume, so very aggressive and very risky. Again, none of these are buy recommendations. They're just ideas, educational purposes. But this broke above the $38 range for the ADR, consolidating up there. Major breakout for this company, and that's really, really nice looking. And then there's Aero Copper, which trades here in the U.S., symbols ERO. Very similar pattern to the last stock I showed you. Broke above the October high, pulling back, consolidating. Damn, these charts look good. And again, this is just the early stages for me. So these are 3 ideas we threw there out at you. This is a high margin producer in the U.S. It's considered itself a U.S. clean energy copper project too, which could catch the eye of a lot of investors. Now, that's copper. The other area we covered this week in Market Insights is the battery metals. Batteries are always a bit of an odd investment choice because when it comes to batteries, there's always hopes of new battery technology coming out. I've been doing a lot of this type of investing for 20 years. For a large portion of that, lithium-ion batteries have been the dominant player, still are the dominant player. But solid-state batteries, I've had nice investments in there, made some money, but really hasn't come to fruition yet. You have some sodium batteries out there. You have more nickel-based batteries. You have so many different technologies and innovations that are on the forefront of what could be a major breakthrough with battery technology, and we need one. Right until that happens, the current state of affairs leads me to back the batteries that are out there that a lot of these EV companies and battery storage companies are relying on at this moment. Because when a breakthrough does happen, it's not going to happen overnight. It's going to take time. So some of the essential metals when it comes to this are lithium, nickel, graphite, and manganese. And if you think about it, the main drivers for this are, again, electric vehicle adoption, more being sold every year, grid battery storage. As I mentioned, for renewables, you need a battery storage for the grids. Then you have robotics. Robots are one of my major themes for 2026. I'm going to write about that next week, as a matter of fact. Drones. Unfortunately, the amount of drones being used in warfare right now are crazy, but batteries for all this stuff. And then, of course, there's the AI-powered energy consumption, which leads just to more batteries being needed. And look at the supply chain. There's stress on the supply chain. Lithium. Demand is expected to triple by 2030. 2030. We're going to show you a chart real quick of the LIT. This is the Global X Lithium ETF. That's had a hell of a year, huh? We began the year down here around 40. We're at 64 right now, 65. had a heck of a year. Nickel. Well, nickel needed for electric vehicles is a certain grade, certain, purity. We're having shortages right now. They're starting to happen for that. Graphite, over 80% supply is controlled by China. I don't need to explain that any further. Manganese, again, limited high-grade deposits. So when supply cannot keep up, price pressures building, pushing into this decade and next, higher prices for all the above. So again, this week putting out 3 stocks, not buy recommendations, ideas, education, getting your mind thinking of those companies out there. Albemarle is number 1, symbol ALB. This is a lithium player, global leader, undervalued to me, and it's really starting to actually turn around quite a bit after going sideways for a while. It really started to take off about 2 months ago. It's a large production footprint. It's in the U.S., Chile, and Argentina. So 3 different continents, which I like. That's really, really big as far as diversification, lowering risk of just one area. Next one's Syrah Resources. And Syrah is an interesting play. It's a stock that I've followed for many, many years. Australian company. Trades here again as an ADR. Trades in less than 20 cents. So be very, very careful with these. Again, not by recommendation, but be very careful. But I like the pullback that I see in this. This is a graphite play. It's key to U.S. battery independence to have its own graphite here. And it's got a major Louisiana processing facility it's working on. So it's already based here in the U.S., which is a big, big bonus for this company. And there's Vale, V-A-L-E, which is a nickel player, but it's also one of the largest metals players in the world. It's a diversified company along the lines of like an Anglo-American, a BHP, a Glencore. But it's one of the largest non-Indonesian nickel suppliers. Because when it comes to nickel, Indonesia has been holding a lot of it back. A lot of nickel mines in Indonesia. You can see here the chart of Vale. It's had a heck of a year. Again, began this year down around single digits, around $9. It's around 13 now. So it doesn't sound like a lot, but that's looking at a gain about 45%. And I think, again, still big upside for all 3 of these out there, long-term plays. So when we're building this metals portfolio, folks, we had to cover a lot of different areas. One was the copper super cycle, the backbone of electrification. The lithium revival, because lithium stocks didn't do much for a while. Let me show you the LIT chart here again. You can see from 2010 through 2020, lithium, this ETF did nothing. Huge rally 2020, 2021, pullback, starting again, what I believe is the next big major bull market, rallying to the best level we've ever seen. We have nickel for EV batteries and other batteries. We have graphite is important because we need a U.S. supply chain because over 80% coming from China. And a couple others I didn't talk about, but I will throughout the week, is aluminum, really needed for AI and data center thermal systems. And then one I've talked about a lot over the years, and that's rare earths, which is needed for everything from rockets to any type of aerospace defense, any type of magnet in anything, really almost anything that's got a magnet around, which most electronics do, you got some type of rare earth in there. Again, the issue with rare earths is we have basically one mine, for the most part, up and running here in the U.S. No refiners yet. We're starting to do that. So basically, almost everything has been refined in China. Over about 80% or so rare earths still come from China. They refine, I think, 85 to 90 still of all rare earths in the world. That number is getting lower as the U.S. comes together with some friendly allies to try and get refining outside of China, not to rely on them. But this is a major player as well, and an area, again, I've touched on a lot more. That's a whole nother show on its own. And then again, think about this. You want to have exposure to this area. I'm going live next Tuesday, December 16th at 4 p.m. Eastern. And every year I put together my kind of outlook for the year. And it's going to be big picture themes, just kind of economic themes, whether it's about interest rates or the U.S. dollar or geopolitics, etc. Then I break it down to megatrends, where I think these are the most important megatrends that you must be invested in every single year. And every year it changes. And not only change, some obviously last for longer. So like nuclear energy will likely be here again this year, was there last year, last couple of years, I should say. But one of them is the metals and mining. that I'm looking at right now. So when I go live on the 16th, which is next Tuesday, I'm going to talk about all that I just mentioned, the big picture stuff, and break down every trend. And what I like to do is share about 6 stocks or so in every trend. Probably gonna have 8 to 10 trends. So we're gonna have about 50 plus stocks I'm gonna share with you. That's overwhelming. And again, these aren't buy and sell recommendations. But what I do then is I then take those and I go through and I curate with my team. And we make a portfolio. We call it the Select Portfolio. I'll be introducing that night as well for all Select members. And 10 stocks to buy for the calendar year next year that we say will attempt to double the S&P 500. If they don't, we always give you a free offer for another year. The Select Portfolio for 2025, which was launched on December 10th, so we did a little early, but we're going to hold it through the end of this year. It's about 3 more weeks, over 3x the market right now. So we're having a hell of a year. And it's something that I've been proud of. I've been doing it for many, many years. So please tune in next Tuesday. This is all free of charge. You're going to get the watch list. You're going to get my entire outlook, all free of charge. I mean, yes, you don't do anything. Just tune in. Watch it. December 16th, Tuesday, 4 p.m. Eastern. I'll be going live, sharing that watch list. If you like taking down ticker symbols, you're going to be in heaven. Because again, you're going to get over 50 of them. All kinds of ideas, metals, mining, biotech, nuclear energy, robotics, quantum computing, automation. I mean, you name it, we are going to be going over it. And, the rise of robots, don't you want to know what to look at? The microcap breakout I just showed you. Don't you want to know which microcaps I think are the best? Robotaxis. Waymo is now truly a major, major player when it comes to the taxi network. You have Tesla doing the same thing. You have Uber involved with it. You have Lyft involved with it. Aptiv, all these companies. What's the best robotaxi company owned? We'll share that with you. All this and more coming up live for free, December 16th to Tuesday, 4 p.m., 8 days before Christmas Eve. What better? Get out there and learn how to make some money, pay for all those beautiful presents you're buying for your friends and family. Well, folks, again, thanks so much for watching. Look forward to seeing you next week on the live event as I spend, if not tens of hours, over 100 hours working, probably over 100 hours already working on this outlook for the year. Me alone working on it, not saying what everybody else is doing. So super excited to share it, put a lot of hard work into it, and I'm excited. And I think we're going to have another great year in the market, and you want to be positioned in the right areas. So again, folks, we'll see you next Tuesday, December 16th, 4 p.m. live, coming from you right in this same spot. Thanks so much for watching Market Insights. Have a great rest of your week. For everybody here at Next Wave Research, I'm Matt McCall. Thanks for watching.